Hello, my Teaserking family. Back for a little bit of economics before the football classes. So I got a busy night. Class at 7, class at 8, class at 9. Hopefully the guy doesn't stand me up tonight like he did Monday. Hopefully not. Good guy. I don't think he will, but I don't know what happened Monday. So there you see it, gold. As I say, it seems to be different days of the week. So Tuesday seems to be the down day, everything. Thursday and Friday, it's all up. Maybe that's changing as the U.S. Really, I don't understand the derivative shorts. You're shorting the most popular thing is one of the stupidest things to do. I mean, you can't, there's too much demand. You can't short it. Before you could. Nobody was buying gold. You could play around with the price and short it. Not now. You have no control over it because the buying's too much, and Russia, China, and India are buying all the gold. So as soon as you short it, it's they put it, it's on sale, and they go and buy it. So that's what's going on. So again, silver 31.17. According to Mark McGuire, it'll break. We need like 33 to break it to 41, which we hope we get, but we don't know. We've been waiting for that before. I thought it was supposed to break 31 and go to 35, and it didn't do it. But what's happening in silver is they're keeping the price down for the consumption part of it, for the Tomahawk missiles, for the solar panels. So they're trying to keep the price down so they can make them. And it's ironic how one's war and one is this ESG bullshit. Hey, Greg and John. Well, I will be coming back at 9 for my private. Well, I have a private class at 7 and at 8. And then at 9 o'clock, we'll be on Zoom. But I wanted to do economics. People were asking for it. So this will go for an hour, and then 7 o'clock, 8 o'clock, 9 o'clock are the private ones. So I'm trying to rest up for it. But so the silver is kind of a unique animal. They want to keep the price down so they can build all these things. Even though in the real market, prices go up and down, it doesn't matter. I think that's what they do. They monkey around with a lot. Oil and coffee and sugar are all price fixed by comex. So they keep the price low in oil so the markets, because if the costs get too high, it's not inflation. If the costs get too high, sales drop and the market won't buy. So you've got to make it where, you don't hurt the market too much, but they can charge, because gas should be a lot more than $3.30 with this inflation. And again, inflation is not prices. It's how much dollars you've printed. And that basically, if you print a lot of dollars, you lose the value. The value goes down because there's too many out there. Hey, Pat, how are you? Can I do private on YouTube? Yeah, well, that's what I'm going to do. Here I just choose, I click on public, and I can talk to you guys. And then there's one you click on private, and then it asks for emails for people that have paid for the class. And I do the privates. So that's where we're at. So anyway, very big week for gold, 36.25. So that's a good thing that we have. It 26.25. Yeah, 36 soon. So with Mark McGuire, he says the new target's 3,500 for brics. That's when they come out in October. They'll say they're going to back the dollar. Their target's about 3,500. But the question is, that's in U.S. dollars. And when the US dollar goes out, what's gold going to be priced at? And then does that mean gold still goes to 10,000 an ounce, but you've put your go back currency at 3,600? I don't know, because it used to be, they used to do, I thought the ruble was priced at like 2,000 or 2,500 to gold. And obviously gold moves. So I don't know how you can stop gold from moving. But yeah, if they came out with 3,500, I'm thinking more like 5,000 to be realistic for the new price. But we'll see. 3,500 will be nice. I'm sure we'll see 5,000. You can earmark your currency to 3,500, but you're not going to hold the price, because you got to realize everybody's going to run into it. And then you're going to realize that the dollar will go out. Gold will not be priced in dollars. So now what are you going to do? See, these guys aren't thinking. They don't know how to think fifth dimensionally like I do. So that's where we're at with it. So a lot will change. As you can see, it's just 27 is just no stopping it, and nobody's selling it. And the problem is, if you do sell your gold, you don't want to buy dollars or Singapore or Hong Kong or China or Russia, because they're not worthless, and they're well worthless, the dollars, and that's really the point. So the strategy is, we're out of dollars. That's why we're buying gold and silver, but then we don't want to sell our gold for dollars because we know they're worthless. So it's a real catch-22 here. You only, let's say you want to go on vacation, let's say I want to go visit Pat in Singapore. Okay, I'm going to take an ounce and sell it, and that'll be for my trip, and that's the airplane, and then there, and getting a hotel in Singapore and food and everything. I'll use my 1 ounce of gold for all that. Okay, fine. But to use my 1 ounce of gold to take profit is the dumbest thing in the world, because you're getting dollars. Our whole exercise here is to get off the Titanic because it's sinking. You want to get off the dollar because it's sinking. So you got to be very careful. Yes, we've made good money on it. Like I say, if you have 50 ounces and it's gone from 1,800 to 2,600 now, it's gone up $800 times 50 ounces, you've made $40,000. So imagine the guys who have like 1,000 ounces, like Mark McGuire or something, or Egon. Well, I'm sure they have more than that, but let's say you have 1,000 ounces of gold. It goes up $100. That's 2 zeros. You've made $100,000. That's why you keep collecting it. And then when it finally goes up, you can see the reward you're getting. Now, that doesn't mean you sell it. This is not stock. We don't want dollars. So we are staying out of dollars. We just are happy it went up. And like I said, if we need to sell 1 ounce, we sell 1 ounce. We don't sell a lot more. We didn't buy 50 ounces to sell 50 ounces because we made, $40,000. We are holding that. We are knowing, wait a minute, it's going up looks like at least another $1,000 from 2,600 to 3,500. And I don't think it's going to stop there. Again, just because they want to set the price of their brics gold back currency to 3,500 does not mean the price doesn't move from there, because you'll have all these people wanting to buy it as they realize their dollars are out. And again, you'll run out of supply, and then the price will go up. And then I guess they revalue the currency at 3,500. Now it's 5,000 per the ounce of gold. I mean, that's all they can do. Looks like silver in comex is almost drained. Just saw a clip on the Freedom Report from Rob Klein's. But you don't know what's real or what isn't. I mean, does anybody really know how much silver there are and how much silver you have and I have and Luke has? I mean, nobody, that's the problem. The gold price is in dollars isn't real anyway. That's not really the true value of gold and silver. That's in dollars, but it's being manipulated. So you don't really have a real price of silver. My guess is at least $2,000, but the dollar is going out, so it's worth a lot more than that. Not this $30 thing. So as it goes up, I think you switch from buying gold to buying silver. But understanding silver will go, but not now. So it's kind of that's the problem. Like we're okay, gold's going up, we're waiting for silver to go up, but they still want to make the Tomahawk missiles and still make the solar panels. And so they are keeping the price down on purpose so they can still make these because Larry Fink and George Soros want the solar panels and this ESG and this whole windmill solar thing. So they want to keep the price down so it's affordable. That's why the price isn't moving. It's totally price fixed. It's all bullshit. But when you got George Soros running things, that's what you get, unfortunately. So we all know silver is much higher than that, but that's why I've been buying more and more gold than silver. I've got a lot of silver, but everything I've been buying the last 6 months, 8 months have been gold, ounces, quarter ounces. I give it away. A girl got married from the swim, and I gave her a quarter ounce of gold, and now it's worth $750. So she's doing all right. And I give Jen a quarter ounces. I might give her an ounce this time, just because what's happening in the Ukraine and brics. And, I can't, what am I going to do? I can go cash it in here and get 26.20 for it and then send her 26.20 on RIA. Maybe, I don't know if I can because there's probably limits. Or I can give it to her and then she's got to find a jewelry store that she can get spot at where she can get $2,600 and $20 for it. And I don't know if she can do that and understands it. And if she doesn't, then I need to go sell one and give her the 2,600. I'd rather give her the gold and say, just wait till it hits 3,500. And then if she needs money, the doctors and all this, she needs it. But again, I'm trying to not sell any of it until I get a much higher price. And with brics happening in October, I'm in no hurry to, I want to at least go till the end of October if I have to sell an ounce. I don't have to now. And, getting football money in now. So I tried this in PayPal today. I got some payments. And so they're making me wait a week because they don't know. They put me on this $300 limit for some reason, which I don't know why. Makes no sense to me. And I'm trying to raise the limit. So when I get a payment in, I got to wait a week before I can get my money because they're worried about some guy put in a hold on it. He paid twice. And so I got the money the first time, everything's fine. The second time he paid by mistake. So he puts it on hold because he doesn't want me to get it. And I'm like, that's fine. But I didn't get it. So I didn't give him a refund. And so I think they see that and they're worried. Oh, what's your business? And this never happens. I've never had this happen before in all my years of doing the football and the economics. So, so what I tried to do is post date it and say, well, I got paid today, but it's for Tuesday, which it is because the football week starts Tuesday. But they said, okay, but now I just wait till next, I think I got to wait till next Thursday to get the money. So I'll date everything. I should get some stuff in today and I'll just wait till, Thursday, which normally I go on Sunday after the games and I say, okay, give me all my money. And I get it on Monday. And now it's crazy. And this $300 limit, I'm asking why. I mean, it would give me a $3,000 limit. And then they say, well, how much are you going to do? I says, I have no idea. Depends how many people want to join the class. Last week was three in my college. I didn't get any pros. Maybe people are waiting because I keep saying you got to wait a few weeks to really get all the information. So they might be waiting, or I had a bad week last week. I'm telling you, I'm going to have a good week this week. And so they do that, but I don't get PayPal. I've been with them for 20 years. All of a sudden they're limited. I've never had a limit. You pay me, I get it. I send it to my bank. So it's really frustrating to me because it's my money. Why are you holding my money? So I don't know. I guess they're trying to draw interest. They're losing money, I guess. I don't know. It really pisses me off. But anyway, so that's what you get um, with that. So that's what you're looking at. You're looking at, you must understand the value of the dollar is gone. It's basically zero. And you use it to pay bills because the people don't understand it. So you can still go to the grocery store and the restaurants and go get clothes and pay your bills with the bullshit dollars because they don't understand. And when I get it, I get dollars and I immediately go buy gold or silver with the dollars I get. So I don't leave it at dollars. Um, but anyway, so that's what we have. And that's what you need to understand. So when you go to sell your gold, you don't want to get back on the Titanic. You don't want to get dollars for it. So just keep that in mind, unless it's just a little bit. And that's why I buy half ounces and quarter ounces and stuff like that. I can sell a quarter ounce. Now it's like $7.50. Let's see where the prices are. Let's go to eBay and see what's happening in our coins. So a quarter ounce gets you $7.40. I just paid $7.22 and thought it was high. $7.30. 730, 700 for a Philharmonic, 712 for a Maple Leaf. Let's see what a 1 ounce is. Keep in mind, I've been buying these quarter ounces for $3.50 for a long time. All right, $27.77 or 1 ouncer. This is not right. The 24. Maple Leaf 27, Cougaran 27. So everything's about $100 over spot. So I love when people ask me about it. Here's 27.20 for the Cougaran, 27.70. The Eagle gets more demand in America, 27.90. So when I priced mine, I priced my ounces at about 27.70. My half ounces might be 1,500 now. Let's see, 27.70. The quarter ounces will be about 750. The quarter ounces, yeah, 740. The half ounces, here you got 1388, 1426, 1381. They're all roughly 1,300, which times two is about 2,700, which is about what the ounce is. Here's a 14, couple of 1,400s. And then the 1/10. And I put them all together. I don't really think there's a difference. 315, 300. I've been paying about 240 for these lately. Until now, 300. 289 for the Cougaran. 306.08. So a little about 310 for the 10th ounce. So what I do is I buy, see, they go up slower. I was buying them at, I think I bought some at 229, the Maple Leafs, and then 259, 279, and then now gold's gone up over $100, and they don't go up that much. They're 308, 310, which is still reasonable. Maybe a little bit more. So that's why you buy 1/10 of an ounce, quarter ounce. It doesn't cost you as much. And then when you need money, you don't need to sell an ounce. You can sell a quarter ounce or a half ounce. I have mostly ounces and quarter ounces, although I do have a bunch of 1/10 of an ounce. I don't have many half ounces. That's the one thing. I either bought an ounce or I bought quarters because I would do the math, and if 2/4 were cheaper than a half, I'd buy 2/4. And for some reason, the guy priced the half more. So I didn't care. It's all gold to me, and that's fine. All right. So let's go to mmcgwire. I'm going to look at 10 best places to visit in Italy when I go to Italy. The U.S. will fall in 60 days. I love these videos, because Saudi Arabia is now dealing with Russia, so they're like making their points. All right, so here's mmcgwire today. Russian buyers target $3,500 gold. So let's, and this one I wanted to show you is, here's a Senator Kennedy, and he doesn't understand. Let me show you this first. He doesn't understand what inflation is. What is wrong with these idiots? So let me show you this Kennedy. Then we'll go to mmcgwire. Probably got a maybe 6:30, 6:45, seeing. And then I don't know if I have the 8 o'clock class, and then I should have the 9. I'm waiting for the guy to respond with confirmation.
This is not a news flash, Madam President. The Americans are struggling to pay their bills. The reason, of course, is inflation. The inflation that the American people, and let me strike that. I don't want to call it inflation. Let me call it what it is: the high prices.
See, he doesn't even understand.
Prices, or they were made.
See, he doesn't even understand inflation. This is a guy, a senator in the United States government, doesn't know what inflation is. So this is why you guys ask me, well, why is this happening? What's going on? This is the problem. They think inflation's prices, and it's easy to manipulate the prices, and then they don't use everything. Oh, wait, that's really gone up. We won't count that. What the fuck? What do you mean you won't count it? So that's the real problem here. You've got these guys that he thinks is prices. I'm not going to go on with that. That was my point. Why do people think it's prices? The cause is printing the money. The effect is the value or the purchasing power or the value of the dollar doesn't buy as much. Let's put it in English. The dollar loses value because you print too much and it can't buy as much as you could before. And so the inflation is strictly printing the money. That's the cause. The effects are the dollar loses value. And then the other effect then of the dollar losing value is it takes more dollars to buy something. So that's why they look at prices, but it's not clear because prices can only go up if the market allows it. So if the market doesn't allow it, prices won't go up. Do you think you don't have inflation? Well, you still printed $21 trillion. So of course you have the inflation. You've done the printing. So therefore it's that's the problem, right? You've printed and lost, the dollar's lost the value. Cost, if prices go up or not is not clear. Can they do it? Can they make a candy bar $20? Well, nobody will buy it. So we got to lower the price. So it's all immaterial. Toyota tried raising the Camry to $35,000. Nobody would bought it. They had to lower the price down to $27 because it was $25. So they tried raising their prices. It didn't work. Does that mean inflation went down? No, they still printed the money and the money still lost its value, but the market would not take the price increase. So that's really what happened. All right, so that to clear up that. So the senator doesn't understand it. Price is going up. Not always. Can I raise the price of a banana to $20? No, nobody will buy them. So I can't just raise. That's why companies go out. If my costs go up, but I can't raise the price, I got to go out of business. Or I lay off everybody, and that's really the problem. All right, let's look at mmcgwire here.
Away from now, can we look at? notion that gold was going to rise into the end of the third quarter, and that's only a few days away from now. Can we look at, as we get started here, let's look at what you're expecting moving into the fourth quarter.
Yeah, great to be with everyone again, and thanks, Shane, for accumulating these questions. So really, one by one, all of the historical drivers which basically had enabled the synthetic gold price suppression game for the entire tenure of the last 50 years, obviously comex market-centric history, have systematically run into the identified central bank physical buy levels that we've identified along the way, up from and this was really kind of where we drew major attention to it, was after the Fed's massive miscalculation in mid-February. We looked at it in the charts. We'll look at it a bit again in a little while, but which is when they tried to chart paint gold through $2,000 into very strong Asian physical buying. And that blew back. Commencing, really, that was where we saw the commencement of a over $600 per ounce rally into central bank driven physical shortages, forcing the Fed to begin folding its spoof hand. Now, every other central bank, and first tier bullion bank for that matter, is long gold for their own books and are continuing to buy gold into every single dip. Now, we've evidenced the Fed agent banks, largely populated by the swap dealers, as we call them, the commercials. We've evidenced them short covering at the top of the current range. Now, obviously, short-term volatility aside, this is a huge change in behavior, and it is a clear sign that the Fed is beginning to capitulate. And it leads us into what to expect as we head into the fourth quarter, and why. After we pop in to look at the charts a bit later, I'll provide the rationale for the expectations of a Russian-driven $3,500 gold price forecast.
Now, Andrew, you went on record at the start of this quarter, the third quarter. I think gold was trading around $2,300 level, and that you said there was sufficient physical demand to force a further $300 rally into the 2600s. Once fresh physical stair step was established, there would be sufficient short stops above the market to force a fourth quarter price of around $3,000 to emerge from the comex swamp, as you put it. Is this still your expectation?
Absolutely, it is, and I think it's really important because it obviously what we're doing is bringing in the physical market side to the market. Everyone can chase the synthetic market, but there is a physical limitation to what they can do, especially as the exchanges start to settle physical markets outside of the LBMA. Now, the reason we're able to withstand all of the official wash and rinse cycles attempts, which have been really, we've been tracking them, how they've sucked in the speculators, gaslighted them into thinking gold was a good short, at each of the stair step supports, especially every time we hit a round number, whether it's 2,200, 2,300, 2,400, even the half numbers like 2,550 and so on. And the reason it's because we're able to actually weigh up the synthetic market footprints against where we see these paper bets clash into enough central bank physical support levels that force these 96% leveraged synthetic bets to actually get unwound. And this kind of frees us up to focus on the larger picture. And it is these underpinning physical market drivers that really pushed back against the Fed's ongoing synthetic efforts to cap the price of gold against really a rapidly debasing dollar. And it's quite simple, really. It just requires a view into where the wholesale physical market's appetite is. And as these physical markets are increasingly being settled outside the Fed's reach, the scope of these synthetic-driven sell-offs are governed by how many of these 96% leverage bets can be cash settled against the speculators inside the comex bubble before it flows out of the casino into the real world. And this gold price suppression scheme has really been figured out by the competing central banks, swapping their debasing dollars for gold. Each unbacked paper market dip has dug a deeper hole for the Fed to actually clamber out of.
All right, now, Andrew, as I remember, you drew attention to these competing central bank buyers stepping up their gold purchases after the 2008 Lehman crisis, but their footprints became impossible to hide around 2010. This is when the PBOC went on record swapping dollars for gold. Can you refresh us on how this continues to play out even today?
Yeah, you're right, Shane. We've been closely monitoring the distinct change in behavior that began in 2010 when China pushed back against the IMF's refusal to allow them to buy the remaining 200 tons of IMF gold that was put on sale at market. And if you remember, India had been allowed to buy 200 tons of the 400 tons. This was their last gold sale. And they put 400 tons on offer. India bought 200. And the remaining 200 tons was strategically parked inside the Bank of International Settlements site accounts. And that was, we did an episode about this. The idea was the reason they didn't sell it to China was they wanted to lend it out to the LBMA banks who are privileged to have gold accounts with the Bank of England. And this enabled the ongoing, officially sanctioned 50-year-old price suppression mandate to continue all the way until, that is, the Bank of International Settlements went long gold on the 2nd of November 2022. Exactly 1 month, or actually it was more like 6 weeks, before they revalued gold as a first-tier asset class on the 1st of January 2023. However, for the first time since Nixon slammed shut the window for central banks to exchange dollars for gold, this 2010 pivot marked the Sans Sou moment when China retaliated and began stealthily competing to swap dollars for gold so as to build its own gold reserves up against the West, and at the expense of the West. And this was also the moment they opened up gold investments to citizens on the proviso that citizens' gold investments returns would be based purely on price appreciation, clearly sending a message they were going to underpin the physical gold price. Remember, they had built house-sized billboards put up, TV adverts, buy gold, buy gold. This was a strategic move. And despite every effort by the West to crush the gold price back down below this IMF sell point, outside the casino, the PBOC underpinned their citizens. They had their pricing was based in RMB, so they underpinned the RMB denominated gold investment price, meaning that at no time since 2010 have Chinese gold investors lost money on gold investments. Along the way, we've evidenced the PBOC opening up much wider access to the less wealthy citizens to invest in gold with the same guarantees, this is important, the same guarantees that investment returns would be based on price appreciation alone. And considering that Chinese traditionally save around 40% of their income, and gold is their best performing asset class bar none, in order to maintain the public's gold investment flow momentum, it meant that at times we've evidenced the SGE premiums plus or minus $150 per ounce when necessary above the debased CME LBMA cartel offerings. So no matter how much the Western-facing dollar price of gold was suppressed, the RMB price of gold was underpinned. What that did, of course, was incentivize China to bring in what was actually devalued gold, underpriced gold, to actually meet this huge demand, which backfired against the West. Now, worse for the Fed, the myopically focused Western-facing markets, synthetically derived, undeliverable, let's face it, we were 96%, only 4% skin in the game there, undeliverable bets, paper price discounts, Western gold has been sucked out, alchemized in tonnage size, never to return. There is verifiable evidence that Chinese citizens now hold well over 25,000 tons. It could be more like 30,000, but conservatively, well over 25,000 tons of 4/9 gold. And when added to what has been accrued by the PBOC for a time of war, it provides Beijing some 60,000 tons of first-tier physical gold market liquidity. Now, this competing central bank gold demand evolved into a formalized gold alliance with Russia in 2013. I remember talking about this with Max Kaiser on one of his shows in 2013 as it was announced. Now, empirical evidence backs up our close contact reports that Russia has also built very large off-the-record oil for gold accumulations, which, and I say off the record, which when aggregated alongside all the BRICS nations' gold investments, it likely adds another 20,000 tons of Sino-Russia BRICS nations' physical gold stockpiles. Just to provide a little context so you know exactly where.
So, what's changed? This is what's changed. So why is gold going up now? Why didn't it go up before? I bought it before. It didn't go up. I lost money. Da, 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 da. I hear all the stories. This is the variable that's changed. This is the iceberg that's hit the Titanic. Oh, China, 60,000 tons. Russia, 20,000 tons. And they're buying it and buying it and buying it. But they buy physical. They buy the bars. They're not buying the derivatives or the ETFs or the stock. So therefore, they're all buying it. That's why the price is going up, because COMEX is not made. It's a pricing tool. It's not like a warehouse and we're buying all this gold and then people come and buy it like you go to Kroger's or something. So it was never meant. It was just meant to price using we'll use derivatives to price gold until they started taking delivery. And as you can see, China and Russia with 80,000 tons of gold are taking all this delivery, and the U.S. doesn't have that much, neither does London. So they run out. That's the end of COMEX, right? But it's like the Titanic. It's sinking, but it takes time to sink. I would say the Titanic's about 90% sunk. So you're basically, here's the water level, and you're basically, you're on the water, and now you're like this much into the water. So it's almost out, and there's nothing they can do because they keep taking the gold because they want to interfere with the dollar and blow it up. And that's, instead of a war, they're doing it this way, which is far more important than a war. And your George Soros is behind it because he doesn't want the U.S. to be successful because the Germans lost World War II. And that's where he's at. We're rich. He wants our money. He's behind all this, and nobody talks about it. It's amazing. I did hear somebody say about the Soros guys today that they wanted to say about Trump, call him a criminal or convicted criminal or something. Use that term. It ain't gonna work. Nobody cares. So anyway, so that's what he's saying. Let's get to BRICS. Let's see. Let's go to BRICS right now.
Water, drugs, food, etc. Generally, a fair price for their bullion.
Wow, that's amazing, Andrew. Now, from the Vault community, we've got some questions here about the progress of the BRICS settlement currency and how this can ultimately affect the anticipated gold market reevaluation process.
Yeah, great timing for that, Shane. It's all coming to a head. Let's look at where we are in this process. And as we know, Basel III NSFR standards, implemented on the 1st of January 2023, provided global central banks the mechanism to be able to revalue their physical gold reserves higher from a 50% haircut to a fully cash exchangeable first-year asset at a time of their choosing. Now, we are approaching the point where central banks will be able to pay off massive swathes of debt by investing excess FX reserves into physical gold ahead of a gold revaluation event. In fact, the global gold revaluation event is already underway by stealth. Look at the prices, driven by BRICS central banks openly racing to back their currencies by purchasing gold to better participate in the non-dollar denominated BRICS-controlled stablecoin settlement process. Now, the depreciating fiat currencies that the BRICS members have been and continue to swap for gold are immediately wealth protected. And as the process rolls forward, as they buy gold, obviously, and as the process rolls forward, the gold is locked out of the fiat gold system, tightening supply and forcing the gold price to naturally rise, as benchmarked against all fiat currencies, that is. Now, while not one-to-one correlated, purchasing gold into a rising gold price also serves to bolster the individual foreign exchange values of the participating 60% component of this unit stablecoin. This is the polar opposite of current dollar debasement. I mean, good God, in interest on naked short of gold debt, and we'll call it naked short of gold US debt, has now ballooned to $1 trillion and growing. It's staggering to even think about. But really, to answer the subscriber's question more fully, there's been a lot of natural skepticism about the decentralized BRICS mBridge settlement currency being actually fit for purpose, or even that it'll be tabled at the Kazan meeting in October. However, our extremely well-connected contacts who have been accurate every single step of the way, from Sparebank digitizing physical gold on the first trading day of January 2023, followed by last year's beta testing of Glaziev's commodity currency, which later this year was affirmed after Glaziev's meeting with Russian Central Bank Governor Elvira Nabiullina, greenlighting the BRICS-backed stablecoin. And there's been other references to it by Putin and others. Now, while we have seen attempts by the US to divide the Sino-Russia alliance, the latest being that visit we outlined in our last episode, drawing attention to White House National Security Advisor Jake Sullivan, and he remember he came in with this big carrot and stick visit to Beijing. However, we now weigh in some actually serious geopolitical sanction escalations, indicating this fungible, decentralized stablecoin settlement token, and I will reiterate, fungible, decentralized stablecoin settlement token, we formally launched in Kazan in preparation for the launch of the BIS-sanctioned mBridge platform, the unit. This is a BIS-backed platform. Really, what's happened is every central bank, bar the Fed, has been loading up on as much physical gold as possible ahead of this. By stealth, the revaluation process is most definitely already underway with a minimum target of $3,000. Now, the misconception that the BRICS currency is not fit for purpose arises from a lack of understanding on how an asset-backed stablecoin token actually functions. The intrinsic value of each unit token always remains proportional to the total value of the unit reserve basket measured in gold, and as a result is expected to remain less volatile than the value of any of the components or other components of the basket. Each of the participating BRICS foreign exchange currencies will proportionately be weighted to the amount of the unit stablecoins allocated to that specific transaction. The more real assets a BRIC member has, gold, but also oil, commodities, etc., which value their FX country in the first place, the higher the weighting is. Obviously, gold actually exponentially raising that weighting. Now, obviously, the Sino-Russian alliance alone has accrued sufficient physical gold to physically flywheel the reserve basket measured in gold. How much I mean, how much is vended in will determine the weight of these offerings. And we see Russia as taking the baton for this next move higher.
Andrew, speaking about Russia, just before we started recording, you had mentioned that you had the rationale for the exact $3,500 Russian-driven gold price. Can you share that with us?
Yeah, absolutely, Shane. So really, following Russia international reserves rising to it was 609 billion in August. That was largely derived from excess oil revenues. A decision was made by the Russian central bank to increase gold purchases. And if you recall, around the 15th of August, we noted the unusually high gold demand and premiums coming out of Russia, with our well-connected Russian-facing liquidity providers remarking that this likely related to the plan to increase central bank reserves ahead of the BRICS Kazan summit next month. Now, these premiums have continued, and we have fresh evidence Russia is trading gold for goods. Now, all the pieces of the puzzle are assembling, some of them as yet unreported. Now, one of the clues as to where the Russian central bank expects gold prices to settle around or shortly after the BRICS currency launch came from our contact at Serdar, and I'll provide a link to this, who let out of the bag before anything was published that based upon the cross rates between central bank rate of 21% and the huge rise in leasing demand, which pays 5.5%, 5% coupon on their gold bonds, the price should be 10,000 rubles per gram, which as of today equates to $3,516 per ounce. Now, the expected US dollar price for gold has since been made public, and it was published by TASS during the September 3rd holiday, and it's gone unreported, but here is the link. The next piece of the puzzle followed the next day on the 4th of September, with the official report that Russian gold output had increased by 5.9% in the first half of 2024, with almost all the production being absorbed by the domestic market. However, the Russian central bank is now allocating 1.9 billion for purchases of gold from September the 6th to October the 4th. So they announced that on the 4th of September. Now, domestic supply will tighten, prompting major producer Serdar to expect prices to rise over the next 6 months. Now we have the Sino-Russia price target, which is why we're evidencing such strong Asian-facing physical demand, with the AM fixes taking advantage of every Fed-driven official gold intervention. As was being relayed from our liquidity providers through its proxies, Russia was the reported large buyer. Notably, into the comex-driven sell-offs, ruble-denominated gold proportionately rose in price or has been rising in price into dips. Now, our liquidity providers also now tell us a large gold for oil deal has recommenced, enabling some of the massive 400-ounce monetary gold demand we've been tracking exiting the UK and Switzerland to be directly exchanged, through proxies of course, for Russian oil. In fact, at best estimate, real Russian gold reserves likely stand at around an unreported total of about 20,000 tons. This essentially puts the BRICS nations' combined gold reserves at around 80,000 tons. But we previously assessed that, and which is basically 40,000 PBOC, 25,000 available in times of citizens of crisis in citizens' gold that could be capitalized on, and 20,000 Russian and fellow countries, which is Saudi, etc., BRICS gold reserves. Now, Polyus also remarks on the unprecedented demand for gold driving ever higher prices, and according to their CEO, I can never pronounce it, Vostokov, representative of the gold industry, sees gold interest not only to central banks, but also to Asian investors. I think I just printed out what he said here, which is, quote, "There is a great demand from Chinese investors, retail investors who are starting to shift from real estate to the local stock market to gold. Experts also see demand from Western investors, including American ones, who have begun to actively buy gold. He said, noting that there is also demand from exchange-traded ETF tied to gold. Interesting.
All right, let's look at silver.
Outside the LBMA CME tentacles.
This is silver now.
All right, Andrew, and what are you seeing in silver?
Well, I knew that was coming, Shane. Shane, let's take a look at the action and where we see the cartel folding their short hand. Now, silver is in massive Indian and Chinese demand, and given the physical demand is centered outside of the RBMA ring fence, and that producers are increasingly circumventing the high-friction, unallocated so-called LBMA professional market, whether it's a cartel, in other words, we've done a lot of work on them, silver looks ready to break out to the upside. Now, Goldman Sachs sees $37. However, a breakout above the COT stops above 32.75, which, if you remember, we talked about these stops here, are the trigger point that really will force the cartel to fold their hand. And these bets are linked to very large OCC bets, which is Office of the Comptroller bets, which are FX bets, are large enough, and this is where the stops are that we just looked at on the 4-hour charts. And then we would expect a move. Yes, there'll be the technical resistance, but bearing in mind they'll be folding their hands at these levels. And bearing in mind this is a gap close, which is going to really trigger another layer of shorts, until we really reach where there's no real technical resistance until 41.65. So we see silver being magnetized to that level simply on the basis of a scramble to short cover physical silver they do not have, and with supply not coming through the LBMA conduit, it is leaving them at a much more illiquid, day by day, a more illiquid paper market to game. Now, obviously, we're recording this episode ahead of FOMC this afternoon, and as I say, it'll all be in the rearview mirror for you when this is published on Friday. But very short term, this is what we're seeing in both related metals. We talked about yesterday's gaming outside the range, following a little short-term short covering, COT short covering overnight. Again, the usual buyers come in, then we get to 2 a.m., we get another sell-off, etc., etc. But really what we're seeing here is very, very strong buying after this capping at the 2600 futures level at 2 a.m. Now, the anticipated consolidative CTA-driven behavior reflects commercials actually short covering into the top of the range. So in the bigger picture, covering into this bigger short-term range. Now, let's have a look at what we would expect. Now, obviously, you've got the advantage because you'll have seen what happened at FOMC. Because whether it's 25 or 50 basis points, it was going to influence Western actors. And if it stays at 25 basis points, we should expect some non-sticky CTAs to knee-jerk sell and the dollar to probably spike higher temporarily. However, the current race into safe haven physical gold sub 3,000 will continue regardless. Currently, in anticipation of a dip, if it's just 25 basis points, which is probable, liquidity providers report very large central bank size bids related to the spot 2550 level, which is actually in futures terms let me just condense this up a bit so you can see. This is where, if you remember, we said.
I lose them here, but anyway, so silver, if it breaks 32.75, goes to 41.75. Which we've heard before, it would go to 35. The question is, can it break it, which seems difficult now, but they don't have any gold to do these derivatives with, but it's not a tier 1 or a Basel 3 like gold is. That's the problem. So They're trying to keep the price down so they can make all the solar panels and make all the Tomahawk missiles and everything else. And therefore, silver, we have to be patient on, but we're making our money on gold. And that's really the key to it. So the gold's going up, so we don't care as much if silver doesn't go up now, but silver will go up. And of course, when you have, 1,000 ounces of silver, every $10, you make $10,000. So that's why you're like going, let's get silver moving. So our investment in silver doesn't move because they want to build Tomahawk missiles and solar panels. But soon we'll get rid of that. And when the dollar collapses, they won't be able to price fix it. And that's where it's going to get interesting. So BRICS will have its gold-backed currency, the unit or whatever. And then how are they going to price gold? Because it's $3,500, but there won't be dollars. So that's coming down the road a little bit. So right now, just focus on the 3,500 for gold. So if you can go buy gold, go buy it. You can see what's been happening, 2,300, 2,400, 2,500, 2,600. It broke 26 and a quarter. So look out, 27, 28 is around the corner because I think we broke it at 2,600. All right, let me check my email and see what do I have for 7 o'clock class or 8 o'clock class. There we go. I got, let's see. All right, Todd bought lock picks. Good boy, Todd. Alex. All right, so I do have a 7 o'clock class. And then I'm going to have I don't know if I'll have the pro class and then I'll have a 9 o'clock class. So I'm gonna end this. We know basically the gist of it. Again, the dollar's dying, so you're buying gold to protect you don't want to lose 100 grand in dollars. So you're going to buy gold. That's the bottom line. And the reason you buy gold is they can't fuck with it. It's limited. It's highly demanded. The price is going up, 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 up. It'll hit 3,500, and then from there, who knows, $5,000, $10,000, $15,000 at least. And then when the dollar goes out, that'll be money, and that's how it should work. The U.S. will try to block it because they'll all be crying because they screwed up, and they'll blame Putin and whatever. But they're the ones who did it. So anyway, so keep that in mind. That's why you're getting out of the dollar, because it's worthless, and you're getting into gold because it's the only thing that they can't make worthless. You don't want euro, and you don't want British pound or Swiss franc. You only want gold and silver. And you realize silver's still cheap. You can buy a ton of it, but it won't go up for maybe 4 or 5 months, where gold is probably 3,500 by October. So if you have the money, buy the gold, I recommend. And if you just have little bits, then buy 10 ounces, 20 ounces of silver at $32 an ounce. Buy the bullion like this, and then just keep buying it. So that's where we're at. So that's the thing. And you can see we're at 26. What was it, 30? So keep in mind, that's the beauty of it. You're trying to get out of the dollar and into gold. And then when you don't want to sell the gold for dollar unless it's a vacation or some bills that you owe, you don't have any money. So you sell the dollar because you want to hold on to the gold till at least it hits 3,500. What I see at the store is people are selling their gold at 2,300, at 2,400. Oh, it's the all-time high. I'll sell it at 20. And the owner looks at me and I just roll my eyes going, they don't understand. I'm not selling my gold now. It's too cheap. That's what I tell Jenna and the girls. I don't want to sell my gold now. Just be patient because they'll need money. And I go, well, I'm tight with money now, but let's get into it. So that's where I'm at now. So I will bid you a fond farewell, and I will see you tomorrow. I'll do football. I don't think I'll do economics. It's hard on the weekends because everybody's watching football, and I do a 10 o'clock class, so it's going to be very difficult. But anyway, that's where we're at. And have a nice weekend, and gold 26, 25, whatever. And next week, we'll probably get to 2,700 because there's no stopping it now. They can't do the derivatives to keep dumping it, so they keep losing money when they do the derivatives. So there's really no point in doing it. Anyway, so that's what's going on. All right, I got to prepare for college football. I will talk to you soon. All right, have a nice day, everybody. www.teaserking.com.